On Monday, the 24th of August, 2026, one of the boldest calls in foreign exchange is sitting at a technical trigger. Scotiabank says the British pound can climb to 1.41 against the US dollar by the end of the year, while the wider 21 bank consensus median sits at just 1.3446. Right now, pound dollar is trading in the mid 1.36s, below the 6-month high near 1.3675, and the market is waiting for one decisive daily close above 1.3650 or 1.3660 to confirm the next leg higher. That gap between 1.41 and 1.3446 is roughly 6.5 cents, and it shows how divided forecasters are on whether this rally is about pound strength or simply a weak dollar. Over the past week, the pair tested the 1.3650 to 1.3660 resistance zone. It reached an intraday high near 1.3675 on the 22nd of August, but it slipped back instead of holding the level. Scotiabank strategists Sean Osborne and Eric Theoret said the move largely reflects broad US dollar weakness, not a sudden improvement in UK fundamentals. Traders are pricing in more Federal Reserve rate cuts while the Bank of England is still expected to stay hawkish, narrowing the yield gap that previously favored the dollar. UK data is mixed. July retail consumption came in below expectations, but August services and manufacturing activity beat forecasts, and the CBI Manufacturing Orders Survey improved to its best level since late 2024. Today's clearest signal is not in the spot chart, it is in the options market. Scotiabank points out that risk reversals have been steadily improving. In plain English, traders are no longer paying a high premium to protect against a fall in the pound. That fading demand for downside insurance tells you that market mood is turning more bullish. It also fits the technical picture. The pair defended the 1.3150 area twice, once in April and again in June, and the trend dynamics have remained positive. Near-term support now sits at 1.36 and 1.3550. If the pound holds those levels on any dip, the path towards the 2026 high in the upper 1.38s looks more credible. Here is the practical outlook. A sustained daily close above 1.3650 or 1.3660 would confirm a bullish breakout, and Scotiabank's conditional target is 1.41. The first substantial obstacle above the trigger is 1.3848. If that close does not happen, the pair could remain range-bound, with 1.35 as a deeper cushion and 1.3150 as the downside floor that has already held twice this year. The market's median forecast for the fourth quarter is only 1.3446, so a move to 1.41 would require a real shift from dollar weakness into pound strength. That remains possible, but as of midday Monday the 24th of August, that trigger has not yet been cleared. So the takeaway is simple. Do not chase the pound just because the headline sounds bullish. Watch the daily close relative to 1.3650 or 1.3660. A close above that level opens the door to 1.41, while a rejection keeps the pair in the range with support first at 1.36, then 1.3550 and 1.35. The wider lesson is that sentiment has improved enough to fade downside risk, and that is often an early signal, but confirmation comes from price action, not forecasts. The pound is outperforming other G10 currencies amid broad dollar strength, and that relative resilience is worth watching closely this week.